So here we go. Even more hurdles continue to be pulled down for crypto. The door to the golden age continues to be inched open a little bit further. The Federal Reserve relaxes stance on bank crypto, but they're giving us specifics now. It says this: the Federal Reserve has withdrawn four crypto asset related advisories, including ones that require banks to inform the Fed of planned activities in advance or receive non-objection letters. The two other main federal banking regulators, the Office of Comptroller of the Currency, OCC, and Federal Deposit Insurance Corporation, the FDIC, have already canceled the requirements to get permission. So they're lining it up. Once again, they're lining it up where banks, who they want to control everything, banks are going to be able to run wild. That cuts down a lot of time, a lot of wasted energy. They don't have to write to them beforehand any longer. And that's amongst other things. Now they're going to be able to deploy at some point. Of course, there's a few more steps to go, but at some point they're going to be able to deploy and maximize crypto, period. Whether it's Bitcoin or XRP, XRPL, whatever they want. That's key. Whatever they want. So looking at the numbers at some of these banks are moving daily, monthly, yearly. If any of that is coming to these utility coin chains, and I think a lot of it is, I firmly believe that, there's no reason it won't. They're not utilizing legacy system products right now. Not to a large degree, they're not. So they're waiting on something. If any of that comes to these utility coin, bank coins, those prices are going to go absolutely astronomical, out of the galaxy. No one can predict how high. It's not going to happen because I believe it's not possible right now to see the largeness of the potentiality that is there. I do. I feel that way. The FDIC's responses to freedom of information requests, combined with the lack of services is what they're saying, launched by banks, largely support this assertion that says they characterize the supervisory non-objective process as a method to, quote, stonewall financial institutions, unquote. Okay, so if they're saying that, and that was a stonewall and it's being removed, then the opposite of that is now true. Now they're going to be unleashed. Instead of being stonewalled, they're going to be unleashed. Why? To what end? They're doing a lot, folks, a lot. I think that is so interesting to me that the bullish energy, right, if we call it that, is not as big as I think it should be. You know, people could do what they want. And as we're finding out day by day, I mean, 2 days in a row, we read articles, or at least articles were released. I know we did cover at least one or two of them, where they're showing institutions are taking over. Even you had one individual from Coinbase came out. Was that article released yesterday? I think it was yesterday. Came out and was talking about how retail was moving away from crypto. I don't know if that's still accurate today. Day-to-day crypto is different. Things move rapidly, but that's what they said. That retail was moving away from crypto and institutions were taking over. That's one amongst like 3 individuals who were talking about that. And I anticipated this. The asset managers, the countries, the companies, folks, they know what crypto is. They've always known it. And they spent a long time conditioning everybody. That conditioning is so dangerous. I'm telling you. And the reason I say that is because people, retail, and listen, retail, they can do what they want to do. Hey, it is what it is. I've been here for that bank money, and I'm going to see that bank money. I believe it firmly. But I can't not see what's happening. Retail knows that they need that value that's coming. They know it. But I believe a lot of retail there's nothing anyone can do about it. I think a lot of retail is going to miss out on that next. I think there's 2 or 3 explosions coming. I believe it from what I'm seeing. There's no way it doesn't occur that way. At least 2 massive explosions, at least 2. But let's keep going, okay? It says here, oversight will now happen through the normal Fed supervisory process. The Federal Reserve statement says, quote, the board will work with agencies, the FDIC and the OCC, to consider whether additional guidance to support innovation, including crypto asset activities, is appropriate, unquote. It says, quote, it continues. Quote, today's announcement from the Fed and FDIC is a welcome and important step toward achieving that goal and ensuring consumers can access these products and services through their trusted bank relationships, unquote. And that's what I'm talking about. I can't state it enough. They're going to go wild. Let me ask you a question, folks. Humbly, if I can. All right. I appreciate every single one of you being here, watching the video. I appreciate your time. I respect you. That's all I can do is just tell you the honest truth about how I feel. And that's it. But I just want to thank you. But continuing on with our line of speaking, every once in a while, I like to give gratitude. This is how I am. They're going to, why did they, about maybe 2.5 months ago, we read documents where they were talking about their desire to utilize, there were some banking entities, their desire to utilize staking. You do know delegation goes with that. Staking and lending they were talking about, and they were talking about it with such zeal. They were excited. Then all of a sudden now, has anyone heard them speaking like that since that time? Because I haven't. Why? I question that. Someone pulled their collar. In my humble opinion, someone pulled their collar and said, wait a minute. Stop that right now. Why? Because their researchers see us researching and they know that we're onto something. And they know that they don't want the people too bullish. They don't. Not while they're getting set up. It's like they're putting together a party. They want to continue to set up their tables and the food and the drink. They don't want you excited about the party. When the party starts, they'll tell you. That's how they feel. We'll tell you when the party starts, but not beforehand. We don't want you excited or knowledgeable beforehand. Not too much. So someone pulled their collar and said, hey, stop that. They haven't spoken. I haven't seen any of these major bank entities talking about that since that time. Why? Now, in my thoughts, logically, staking percentage, the yield that you get from it is delicious. It's amazing. One, now that everything's going to be unleashed, I think that's going to be even more potent. Two, I think the banks know how to maximize it. They have the power. They have the connections. They're going to max that out. 3. And then if they're maxing that out, if they allow, let's take something like any of these bank coins. XRP has banks. Hedera has banks. Stellar has banks. A lot of them have some banks. Let's say any of those banks decide to utilize some of those native cryptos, and they can. Who says they can't? They can. I mean, if you don't believe that they're going to do that, that's up to you, but they can do that. If they do that, let's say they take XRP and they say, hey, customer, do you want to stake with us? How's that you know how many branches they have? It's not just the main banks, it's their branches as well. We're talking a possibility of thousands upon thousands of banks having customers who they need to keep happy, staking at some point. What does it do to that price? I don't think that that's being discussed enough. I really don't. That's going to be unbelievable. Then here's another thing, the continuity that's going to build. Once customers get a taste of that staking yield or delegation, whatever it's going to be more. I think it'll be more like delegation, honestly, because the bank's going to take a percentage. It's more like delegation, right? A taste of that delicious yield. They're going to want to keep it there. I think about more so than savings accounts. I think that this is their key to remedying the savings account problem. Now, And so that's going to build a continuity of capital on any of these chains that get involved in something like that. We're just talking potentiality here, playing with ideas. Now, thinking about the savings account problem, there's no way someone's going to tell me there is not a problem when in the mainstream media, one of the things that has been reported extensively over the last 4 years is how bad savings accounts are. People's money go to die there. It's been one of the most covered problems of the banking industry, along with things like the Zelle problem, which they're even having problems up to today with Zelle. You saw that article that came out? Right. That's going to drive customers away. They need something to bring customers back in, to make customers feel like it's beneficial to stay with them and not go to a money market fund or something else, cash sweep account through an NBFI. Because, of course, you could say, well, cash sweep accounts still deal with the legacy banks. Yeah, but they're not going through the banks. They're going through non-banking financial entities who are utilizing those particular accounts. There's a marked difference. So if they offer staking or delegation, that brings people back in. The bank's making a lot of capital, saving a lot of capital. The customers are making a lot of capital. And there's a continuity on chain. And anyone who's holding those particular native cryptos, theoretically speaking, not financial advice, will benefit greatly. So there's that. So it also solves that that bad energy, that bad reputation that they have with savings accounts, and people's money going to die there. So now let's move on from there. Let's go here. We have some more articles. Okay, let's knock this one out. This is a catalyst. However, it's not something that, to me, I think about very often. But this article was titled XRP trades in range. That's not the important part. Ripple president confirms it will not go public in 2025. So that's what they're saying as of now. Monica Long is confirming it. First bullet point, it says CEO Brad Garlinghouse and President Monica Long state Ripple does not need outside funding. I wouldn't think that they would. I wouldn't think that. Next bullet point, it says Ripple repurchased shares at a valuation of $11.3 billion, down from $15 billion in 2022. Let's see if we can find the actual quote here from Monica Long. The IPO talk has been around for years. Long stated that companies typically go public to raise capital or increase visibility. They definitely don't need either. They're getting a lot of press right now. Ripple has done a great job keeping themselves in the news for positive reasons, and they definitely don't need the capital. It says, but Ripple does not need either at this stage. I was just saying that. As reported by Coinpedia.com. Good job, Coinpedia, on that. CEO Brad Garlinghouse supported this view, confirming that Ripple does not seek outside funding or plan to become a publicly traded company in the near future. Okay, so there's that. All right, so let's keep that in mind. Let's move on here. We have a little bit of Bitcoin, Bitcoin and gold. So this article is titled Bitcoin ETFs on $3 billion quote unquote bender. Log first full week of inflows in 5 weeks. ETF analyst Eric Balchunas pointed out how quickly spot Bitcoin ETFs can go from first gear to fifth gear, quote unquote. It says spot Bitcoin ETFs in the United States saw over $3 billion in inflows this week, marking the first full week of consecutive inflows in 5 weeks. On April 25th, the 11 spot Bitcoin ETFs saw $380 million inflows, bringing the total for the week to around $3.06 billion over 5 consecutive inflow days, according to Farside data. The last time spot Bitcoin ETFs had a full week of inflow days was the trading week ending March 21st. Strong inflow week turns April into a positive month. ETF analyst Eric Balchunas said in an April 24th X post that ETFs, quote, ETFs are on a Bitcoin bender, unquote. Bear with me one moment, please. Quote, what's really notable here is just how fast the flows can go from first gear to fifth gear, unquote, Balchunas said. Wait, why did they repeat that? Did you see that? Why did they repeat that? I don't understand why they do that. They did it at the top and then here on the second, under the second header. All right. Forecasting that some of the inflows may be due to the, quote, basis trade back in effect, unquote. Bitcoin is going to continue to do well. Amid ongoing macroeconomic uncertainty, spot Bitcoin ETFs have experienced a volatile April, with 9 out of the 18 trading days so far being outflow days. Another thing I'm going to begin watching now a little bit more seriously. I'm seeing a lot of large entities starting to push that idea of, oh, well, we believe in this, what they're saying. We believe that Bitcoin is a hedge and, you know, Bitcoin is like gold. I'm seeing that more and more, not from retail. It used to be retail pushing that idea. Now it's the large asset managers and banks pushing that idea, companies pushing that idea. Whether they believe that or not, I don't know. But could they use that? Yes. Could they believe that that's going to manipulate the public to get involved? And so maybe they get involved a little bit more heavily as companies to try to, manipulate things a bit and scrape some value off the top. I think that that's definitely possible. So I'm watching what they do. But nevertheless, the big companies are the reason why Bitcoin is getting propped up. Like I said, it sort of is the gold effect, that if we see what happened to gold happen to Bitcoin, then that's going to make that price explode. Simple as that. And these companies, although they will sell, they will. Once again, if they treat Bitcoin like gold, which is something we have to continue to watch, the effect of the selling would be minimal because they know how to hold. They gorge on assets. They've done it with gold. They gorged on gold. So when you see India sell or China sell a little bit, it's inconsequential. So we shall see. It says, however, a strong surge of inflows over the past week has turned the month positive. Okay. On the same day, strategy founder Michael Saylor reportedly said at the Bitwise Invest Bitcoin Corporation's Investor Day that BlackRock's iShare Bitcoin ETF, quote, will be, why did they put a quote there? Will be the biggest ETF in the world in 10 years. I can see that happening for sure. It may not take 10 years, honestly. As fast as Bitcoin can move, I still don't consider this Bitcoin's max mainstream appeal. So there's that. I think that there's going to be a major mainstream push for Bitcoin. A lot of people are still not in Bitcoin. A lot of companies still not in Bitcoin. A lot of companies are still not in overall crypto when it comes to altcoins. But that time is to come. I think it'll be very, very apparent when that happens. You stay on top of your mainstream news articles and such like that. You're going to start to see it happen. And I think another sign will be a majority of people will be talking about Bitcoin at that time. You'll hear it out there in the regular world, in your day-to-day life. And then also, a lot of the article writers, big-time article writers, will be positive on it for once, which is definitely not the case these days. And once you see that continuity there for a while, I think over a few weeks' time, then you it'll start to become clear that this is a mainstream push that Bitcoin is receiving. All right, so now bear with me one moment. So now we'll cover a little bit of gold news here. It's been an unbelievable run for gold. And have you seen the silver article? Silver still is positioned well. Like despite any volatilities, despite any drops or anything like that, silver is still well positioned for the future. This is why you got to. So anyway, this article is titled, "Gold is Still Only One Comment Away from Record Highs." Let's scroll down here and find out what's going on. It's been a volatile week for gold and silver, with dramatic price action sparking new debates around where the precious metals are headed next. Where the big questions now, has gold topped out? I don't think so. I don't think so. Do you think so? I don't think so. And is market uncertainty truly fading or just catching its breath? Yes, I think it's catching its breath for sure. This always happens. This always happens. I remember when gold went to It was somewhere in the 2000s. It was like 2,300 or 2,200. I believe it was around that range there. And then it just plummeted down to like 1,900 or 1,800, somewhere in that range. And of course, people were panicking, etc. I wasn't. The catalyst remained. And so I felt like it was going to bounce back, which it did. Now you see where it is now. However, I just wanted to point that out to say these things happen. It happens all the time. We've seen, and going by what I just explained, we've seen much worse. Like we've been through, gold holders have been through rough times. So we've seen quite a bit. To me, this is nothing. But so gold has the resilience because of the central banks and the big money people that are propping it up. But let's keep going. On Tuesday, gold surged to an intraday high of $3,500 an ounce during Asian trading. At that level, the metal was poised to end the month with an 11% gain, its strongest monthly performance since November 2011. But the rally proved short-lived. As we noted earlier this month, gold's momentum had pushed it into overbought territory. And like many assets in such a position, it was vulnerable to a pullback. I say it's just a natural thing. It's a natural occurrence in these cycles that's going to happen, especially once Bitcoin started going up. When Bitcoin started going up, it looked like a little bit came out of gold. It went into Bitcoin. And just watch that. If Bitcoin goes down, if a little bit goes back into gold, then we know that there's that flow there. We confirm that flow. So I'm keeping my eyes on that as well. It says, and like many assets in such a position, it was vulnerable to a pullback. By week's end, prices had slipped roughly 6% from Tuesday's peak. Spot gold last traded at $3,291.60, down about 1% on the week. Now, looking at that price, to anyone who bought at the top there, of course, that's not going to be a great thing. They may have a little bit of anxiety, which I would say I don't feel like they should. Not financial advice. But think about this. To the people who bought gold when it was $1,700, $1,600, $1,500, $1,400, $3,291 is still a beautiful, beautiful price, right? So, I mean, it's all about where you've gotten in, and nobody can know where people have gotten in, right? But this is why it's important early on, because a lot of people they don't act upon situations that are good, for lack of a better word, that are good, and they let the opportunity pass them by. Some people didn't. So for those people who didn't, that's a beautiful price right there. And any volatility around here from 3,500 to 3,291 is almost meaningless, right? Let's continue on here. It says, still, context matters. Even with the recent drop, gold is up more than 25% year to date. That's nice. And 41% over the last 12 months. For long-term holders, this remains a bullish backdrop. I was just saying similar. I like this article here. This is on kitco.com. They've been doing a great job over there. Very good article. I'm glad they covered that. It brings a lot of things to mind. It says, from a technical standpoint, analysts are watching key support levels. $3,147 marks the 38.2% Fibonacci retracement of the week's high, while $3,039, the 50% retracement, aligns with gold's 50-day moving average. A deeper correction to the 200-day moving average would require a 16% decline to $2,729, which many see as an unlikely given today's economic climate. Yes, that's another thing. Yes, that geopolitical tension that is there. That's going to continue to drive value into precious metals. Global growth is slowing. Central banks are still recalibrating from years of easy money, and geopolitical risks continue to simmer. All right, so we'll keep our eye on that and see how everything continues to go. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.